What is going on, guys? Welcome back to another video. Sunday the 28th of December, and this video is highly important because we tackled the question of stable coins. There was a brilliant question in our Discord yesterday which I saw, and it inspired me to do this video, and that was, how are we going to protect ourselves in the face of the Clarity Act and the stablecoin adoption? So what I thought about doing, and I have actually published this research, anybody in the Discord can actually get a copy of this. It's a SWOT analysis based on the Clarity Act, the Genius Act, and market structured transformation. And you would get this piece of research in our Discord because it is going to be very key in how we survive a market post stablecoin adoption. So a lot of the fear comes from the fact that, of course, the market is fearful, but what I've noticed is Bitcoin's volatility index is down to just 1.9, right? So these are typical bear market volatility indexes. It's very low. And if you go back to, say, for example, March 2020, we had an index here of 4.8. We had an index of 18-20% back in the day. But recently, Bitcoin has been rather stable, right? S&P and everything else has gone up, but Bitcoin has been very much stuck to this range of 87, 85 to about $90,000. Altcoins, however, of course, today bouncing a little bit, but overall, the fear in the market is palpable. And if you look at the different altcoins, you see the market is still at this minus 29 in the fear and greed index, and that is fear. And last week, of course, we were slightly greedy, but overall extreme fear for me remains in the market. And when you look at this sentiment here, this period reminds me of this period back in March, from March all the way to May, and of course from October all the way to January. And January is the key, right? Next year we are expecting the Clarity Act to kick off. Now the Clarity Act, as you can see here, there is a provision for anti-CBDC and surveillance in the bill. However, the picture goes way more than that. In my opinion, if you look at the 10-year bonds, Tether now holds as much. Are they going to trust, these private regulated or unregulated companies to handle this in the long term? I think they are using this as a tool to keep the dollar relevant. But let's actually think about this in a different way. We are crypto investors first and foremost. So what kind of stable coins are there? Because most people don't actually know. Now, there are USD stable coins, okay, which have a market cap of just over $300 billion. And these are all of the different stable coins. And within that, there are asset-backed stable coins, right? So these fiat-backed stable coins. And this is, of course, including Tether, but you have the likes of PayPal there, Ripple, and banks, Ondo, and others, right? First Digital, World Liberty Financial, they all become one-to-one backed. Pax Dollar as well is there. So they all become a dollar backed versus USD, just a USD stablecoin, okay? And these are kind of real world assets, one-to-one tokenized. So where do we see the break as crypto investors? Now, what I've done, in my opinion, I've had a look at the market. And when you look at the likes of Ethereum, Solana, and of course, some of the layer ones like Sui, other layer ones, even smaller market caps like your Kaspas, your Seis, they all have relevance. Aptos has one of the largest stable coins in the game. But how does this protect us moving forward? And what can we do? Now, we need to start thinking like institutions, in my opinion. So here's the narrative. Everyone thinks USDC and USDT is just a trading pair, right? And we go from risk on to risk off. But in reality now, stablecoins have become more competing assets to traditional altcoins. And think about this from an institutional perspective. Say you're a pension fund and you want crypto exposure. What do? Option A, you buy Bitcoin and deal with 30% volatility, and explain to the board. Or option B, you hold regulated stable coins and earn 5 to 8% yield of course, check the crypto allocation box and sleep at night. And that's what we need to think about. Okay, so that's what they're going to go for. And this is going to be the structural problem for altcoins, because capital entering crypto through stablecoins might be staying in stablecoins. Now, I'm not saying capital will not flow into altcoins, but I'm saying the speculative side of altcoins will likely detach from those cryptocurrencies that have the, I don't know, the stablecoin TVL, you know, those layer one infrastructures, that proof of work like a Kaspa, depending on who's building on it at the time, you know, and then you'll have things like Chainlink, you'll have the, you know, those big cryptocurrencies which meet with the compliance and are used for tech. And I'm not talking about things like Bitenso Tau, for example, which are AI cryptocurrencies and have a real use case. Those will continue to grow an economy within the token. However, the error for me, I mean, this is, I'm only kind of interjecting here. I'm kind of forecasting the future. But for me, it's very clear. These 250 billion stablecoin, or 300 billion now, that is sitting there, that's money inside our ecosystem that's not rotated into altcoins. And it's not chasing narratives, it's just sitting there. Now, of course, we've not had an alt season, and this could be one of the reasons as to why, as the Clarity Act and the transition happens, that is exactly what's been going on. That money is not being opened up to the markets because there is another design through stablecoins in which they can earn yield. And these are one of the risks I saw with having the regulation that's coming. Now, of course, the first federal framework was back in July. That was the Genius Act. And of course, the second piece of legislation is the Clarity Act, passed through the House in July, waiting for the Senate. Now, this one's going to be the huge one for altcoins because it creates the concept of a mature blockchain. You have to understand, there is a criteria. No single entity can control 20% of token supply, okay, or voting power. No unilateral authority over protocol upgrades. Value has come more from the blockchain functionality and not from the issuer's efforts. Now, if the chain meets that criteria, you get your CFTC oversight instead, you know, from the SEC, right? That's the promised land for crypto projects. Now, Bitcoin and Ethereum qualify today. Most other chains, well, they don't. And that's what we're seeing as we get more ETFs. That's what we need to monitor. And that is going to give us a clarity into how we can make money in the space moving forward. Okay. So stablecoins pegged to the dollar. This is 98% of the market, by the way. USDC, USDT, of course, and others. Fiat-backed stablecoins are backed by actual currency reserves. And here's an important thing that most people miss. USD stablecoins refer to what is pegged to